Pat, good morning. This was an interesting quarter because, as far as the top line and results, you were very upbeat about them. There was a lot of focus, though, on margins. I noticed, though, in the analyst notes, a lot of analysts saying Pat's plan is right, but it's going to be rocky from here. Investors not picking up on that theme yet, though.
Well, thanks, John, and great to talk to you, Carl and Deidre. And, we just finished a great year, right? This is a critical, transformational year for us. And we finished beating by $1 billion in the quarter. So, I'm just very proud of the team for all the things that we accomplished. We're coming off the high of the big Ohio announcement, the progress on the CHIPS Act, the strength of our product line with new products like Alder Lake. So a lot of good things happening. And we said that we were going to be investing. We're doing exactly that. We said margins would be between 51 and 53%, and we guided to 52%. So I just say, to me, there's exactly what we said. And if anything, we're a little bit ahead of the schedule that I had for myself personally as we came into the role. And we're just executing exactly what we think is required to reestablish Intel as the unquestioned, iconic leader in the industry. We're well on track to do exactly that.
And that's something I wanted to clarify is, there was a lot of worry about Sapphire Rapids that I was hearing over the past few weeks that it was slipping. But you seem to be saying, no, you're delivering it Q1 on time. Is it at the volume expected? Was there anything to those rumors?
Well, what we said last quarter was that we'd start shipping in Q1 and ramping in Q2 and through the year. And that's still our plan, to start shipping in Q1 and ramping in Q2 and through the year. And Sapphire Rapids is going to be a great chip. It's a big performance step up, but some key feature areas like AI, 30x improvement, where now all of a sudden it's not just good for inference, but good for training, security features. So a very differentiated product. Every cloud vendor, every OEM, every socket is going to be targeting Sapphire Rapids. It's going to be a great product. And we'll be updating more on that as we come up to our Investor Day in a couple of weeks.
Okay, looking forward to that. Let me check in on the three, I'm calling them three, there's probably more than that, but big shots that you guys are taking. There's the process technology leadership that you're aiming for. There's the reclaiming design leadership that you're aiming for. And there's the Foundry business that you're building. You, of course, got doubters on all three. Do you consider yourself on track with all three of those strategic priorities?
Yeah, and let's just take them one at a time a little bit. Process technology, 5 nodes, 4 years, Intel 7, now in production with Alder Lake. Intel 4, 3, 20A, and 18A, all on track or ahead of schedule, exactly what I said last quarter. And relatively speaking, some of the competitive offerings have slipped somewhat. We're on or ahead of schedule. That competitive gap on the process technology closing maybe even more rapidly than I would have forecast a year ago. On the product side, obviously, we're making great progress. And Alder Lake, some of the headlines that came out just last week, that we crush our prior and all competitive alternatives with that product. So the products are getting better, but we still have room that we have to deliver there yet. And the Sapphire Rapids is an example. Hey, I got a lot of work to do yet to deliver unquestioned leadership products in every category. And on the Foundry business, hey, this is a long play. Customers, it takes a couple of years for them to move designs into new foundries. And it's a business model expansion for Intel. And as I said on the call yesterday, hey, we're a bit ahead of the schedule that I set for that, the momentum that we're seeing from the customer and the industry. And for that, obviously, that leads then into the big bets on capital. And we're following what we call smart capital, where we need to build shells, and then we'll decide exactly how we populate them for our products or for Foundry customers. But overall, that build out of the manufacturing capacity, the semiconductor industry is going to double over the course of the decade, and we're going to be positioned to capitalize on that.
Hey, Pat, it's Deirdre. You do paint an optimistic picture. You did so on the call last night. Like John, I heard some skepticism from the analysts that pressured you a little on gross margins and supply constraints. You've even talked about this. There's quite a bit to catch up on in your core business, and your competition, meanwhile, is making moves in M&A. Are you trying to bite off too much by establishing yourselves in the Foundry business? As you say, it's going to take time, but is there a point at which you step back and reconsider that strategy?
Oh, I am so committed to our Foundry strategy, Deidre. You know, the way to think about it, and I've described it as IDM makes IFS. Our internal manufacturing gives so many assets to our Foundry business, and our Foundry business makes IDM better because it establishes, you know, the engagement with the industry, this benchmarking and testing to win external customers. It makes every aspect better. And nobody else gets to go into the Foundry business with a fully global manufacturing network, leadership process technologies, the broadest set of intellectual property. All of those assets get leverage to build a Foundry business. And the geopolitical implications, you know, it's just a tailwind. The fact that we're going to build out a Foundry business in U.S. and Europe at scale. And the world needs leading edge process technology at scale. That's going to be the driver of the second half of this decade for the Foundry business. Only 3 companies in the world can do it, and clearly Intel, with our stewardship of Moore's Law, we are committed to keep that alive and well and be the leaders in process technology yet again.
Yes, committed, Pat, and I know that you have some support from the White House, which was on display earlier this week. I want to talk a little bit more about gross margins, though. They've come down from, you know, the mid-60s last decade to just above 50. Are you confident that, you know, 50% is where it bottoms out? If it goes lower than that, would you then be willing to consider that strategy?
You know, we've set a range of 51 to 53 and then rising as, you know, we laid out a 5-year picture and rising in the latter part of that 5-year period. And we feel very comfortable with that. The guidance that we gave yesterday of 52%, right in the middle of the range. Obviously, we beat again last quarter on our profitability. So all of these things, we feel very comfortable with the range that we're laying out. And for that, you know, the lowering of margins, you know, there's good news in that because we haven't brought a major new process technology for quite a number of years. So as those costs start to roll into our business model, you know, to us, this is all predicted. This is all according to plan. And I have great confidence that we're going to meet and beat those ranges. That's why we lay them out the way we do. I'm a meet, beat, raise kind of guy. And yet again, we had another great quarter last quarter, and we're confident that we're going to keep this machine gaining momentum into the future, Deidre.
Hey, Pat, you got a lot of near-term concerns to address, and I know we're asking you about them, but there is this sort of low-grade fever regarding geopolitics and open questions about China and Taiwan. And I wonder, as we get past the Olympics and some of these big events in China this year, is there a playbook to deal with a geopolitical disruption to global supply?
You know, clearly this is a backdrop, Carl, that's been driving this view, and I've used this phrase that we need a globally balanced, resilient supply chain. And this is part of what motivates the U.S. CHIP Act. It's part of what motivates the EU CHIP Act. You know, we simply need a better supply chain that's balanced across the geographies, that has more redundancy and resiliency built into that. You know, that's clearly why we've taken a number of the steps like we've done. And just last week's announcement, you know, with President Biden, you know, farm kid from Pennsylvania introducing the President of the United States of America. Wow. You know, this is just beyond any of my wildest expectations. And announcing the Silicon Heartland. And the response that we've seen from the heartland of our nation, you know, to rebuild manufacturing, to bury that term, the Rust Belt, and now become the technology hub of the nation. Boy, incredible enthusiasm for that. And yeah, we see this as a fundamental rebalancing of that global supply chain. The world needs it. Where are semiconductor capabilities, technology leadership, digitization of everything? Yeah, this is important for our nation, the economy, our national security, and we're clearly going to be one of the companies making that happen.
Yeah, the president even called you the boss, yeah, which was a fun moment. Let's talk about graphics. Art graphics, you're starting to ramp that. To what degree do you expect it in 22 and 23 to add meaningfully to revenue, perhaps to margins, depending on how much of that is going to be higher-end discrete graphics?
Yeah, we're launching those products, and as you saw at CES, Carl, 50 design wins for that across everybody. in the industry. So there really is a thirst for us entering that marketplace. And, frankly, I can't remember a time that I've introduced a new product, probably since the 8046, that had this amount of excitement from customers. Please give us more for it. So there's real enthusiasm for us to enter that market. It's going to take a bit to ramp the business, but it's going to be a meaningful contributor. And that's also why I've laid out this plan of giving segment reporting across our business areas to give that transparency, the internal accountability, as well as external visibility for how we're going to run those business. This will be a very meaningful new business for Intel, and I'm quite excited as we'll launch those products publicly later this quarter.
Now, I'm not going to expect you to give me the meal ahead of Analyst Day, but maybe give us a bit of the menu, particularly what's going to be new. What's the new data? What kinds of new benchmarks can we expect to get from you in Analyst Day?
Yeah, so we're, the first and critical thing is building on that last comment, John, is that we're going to lay out the business outlooks for all of these 6 accountable segments that we're going to have going forward. So that's going to give us a lot more clarity. And, you're going to say, how fast is that graphics business going to grow? And I'll say, well, here it is. We're giving you those numbers across graphics, across networking, across Foundry, across mobility, as well as our 2 core businesses of client and data center. So really laying out the strategies for all 6 of those business areas. We're going to give meaningful roadmap updates on all 6 of the business areas. And we're going to dimension the growth rates and the revenue expectations that you can see across all 6 for the next 5 years. So we're going to give that guideline of how do I get to that 10 to 12% growth rate that I've described that people have said, how do you do that? Well, we're going to tell you exactly how we do it because we're going to build up across those 6 business areas to get there. And we're going to have some exciting announcements to go with each one of them. And I think it's just going to be a great day. We're going to lay out the strategy, give the checkpoints that the street can measure us upon, and have my leaders standing up and describing their passion and enthusiasm for each one of those business areas. It's going to be a great day.
All right, Pat. Thank you. We'll look forward to that for sure. Pat Gelsinger, CEO of Intel.